In this extended session, we'll cover Ipsas 10, events after the reporting date. We'll explore definitions, key concepts, examples, accounting treatments, disclosures, and real-world applications, ensuring you're fully equipped to understand and apply this crucial standard in public sector accounting. Ipsas 10 ensures entities reflect appropriate adjustments or disclosures for events that occur between the reporting date and the date financial statements are authorized for issue. Cover: public sector entities, all financial statements prepared under accrual basis Ipsas. Reporting date, end of the reporting period. Authorization date, date when FS are approved for issue. Events after reporting date, ERD, events between these two dates. Adjusting events, provide additional evidence of conditions at reporting date. Non-adjusting events, relate to conditions arising after the reporting date. What are adjusting events? Adjusting events require adjustments to financial statements. Examples: court case resolved, confirming existing obligation, bankruptcy of a customer, evidence of prior impairment, discovery of fraud or errors. Journal entries, public sector examples. Example: customer declared bankrupt in Jan. Year-end was Dec 31. Account receivable was doubtful. Dr. Bad debt expense, accounts receivable. Public sector example: overdue taxes written off due to confirmed insolvency of a taxpayer. Narration: these do not lead to changes in FS amounts, but require disclosure if material. Examples: major natural disaster after reporting date, announcing a restructuring plan. Significant drop in asset values post-year-end. Government announcement of new policy. Must disclose. Nature of the event. Financial effect, if known. Example: hospital damage by flood after year-end. Disclose estimated repair cost and insurance coverage. Important for defining the cutoff for recognizing ERD. Examples: date approved by governing board, minister, or controller. If another level of approval is needed, that becomes the authorization date. Financial statements subject to approval by Parliament or regulatory bodies need clear policy for defining authorization date. Documented approval procedures essential. Proposed dividends after reporting date are not liabilities at year-end, as there is no present obligation. Entry: disclose in notes, don't record as liability. Events after the reporting date can affect the going concern assumption. Examples: loss of major funding after year-end. Legislative changes affecting operational viability. If entity is no longer a going concern, change basis of accounting. Case 1, legal case settlement. Legal claim existed at year-end. Resolved in January with liability confirmed, adjust FS. Case 2, fire incident post-year-end, fire damages main warehouse in January. No indication of issues at year-end. Non-adjusting event, disclose only. Case 3, COVID-19 style pandemic event lockdown announced in February. Economic disruption, assess if conditions existed at year-end. May affect asset valuations, going concern, and disclosures. Let's test your understanding. Sample questions. 1. What's the difference between adjusting and non-adjusting events? 2. How do you handle a bankruptcy confirmed after year-end? 3. When do you disclose and when do you adjust? Common mistakes: treating all post-reporting events as adjusting, ignoring material non-adjusting disclosures, confusing authorization date with year-end. Let's recap. Ipsas 10 deals with events after reporting date. 2 types: adjusting, require adjustment, and non-adjusting, require disclosure. Authorization date is key cutoff. Going concern and dividend issues must be carefully assessed. Always document your assessments. Thanks for joining us. If this helped you, like, subscribe, and comment with your questions below. Stay tuned for more Ipsas content right here on the Accounting Desk.